Okay, so once again, another day, another dollar on my risk management account. New highs for today, made a total of only $400. That's okay. Not taking losses, all that matters in this risk management account. As long as this account continues to see new highs on a weekly basis, not even on a daily basis, as long as I do not lose money on a weekly basis for this account, I am happy with the strategy of risk management. Um, so what happened today exactly? So pay attention to this trend line. This is the 15-minute trend line. You can see how this line is a technical line of interest where essentially a lot of the symbols, um, a lot of the key equities and stocks, Apple, you can see there's a reaction. Google, there's a reaction. Shopify, there's a reaction. Tesla, there's a reaction. And of course, Amazon, there's a reaction. So, like I said yesterday, this drop, this sell off from trying to break out, I knew this drop right here was because on the QQQ right here, yesterday actually, right here on the QQQ, they trigger a sell-off or enough of a retracement so that the QQQ would go down and break this VWAP. This VWAP is a volume weighted average price for the day. So a break of this triggered the sell-off on the QQQ. But my suggestion was that it wasn't really the QQQ that sold off. It was a technical sold off because of the options on Amazon, the contango, or the people taking the other side of the options. These options right here. You see how it went all the way up to 35. This volume. This volume. Essentially, all this volume was so the players, the market maker, the hedge funds, the insurance institution, whatever the institution that takes the opposite side of this, um, this the call options, because there's buyers and there's sellers. Yeah, the sellers, and those people who sold the options, the call option had to get a way to get it down. Now, sometimes it doesn't work all the time, but I knew that with this type of volume, they were going to attempt it. And they did attempt it. And that's what happened at 2:15 yesterday. They attempted, and it was a successful attempt. Basically, either they ladder trade or they shorts or they did something triggering this to go down, along with Apple at the time. I think it was right here. Apple, right at this flat line, went down. So that cascade, the whole rippling effect, like I said, these stocks are kind of tied together based on algorithms, based on computer programs that link them together. The QQQ have Apple in its components. Not only its components, but also the traders, the hedge funds. They all have programs that sync each other together. So when Apple broke, uh, well, or you can say when the QQQ broke, Apple broke, which is also when Amazon broke. So I had a suspicion that this was just because of Amazon and maybe also Apple. And you can see Apple obviously was going really high too. You can see it was breaking out, breaking out. So Apple was breaking out as well. So there was I think the primary factor is Amazon, secondary factor being Apple. So it was a successful retracement. I wasn't sure if they were going to follow up, and surely enough, I said, don't, try to lead in and buy a call option or buy a put option because it can go either way. And surely enough, in the morning, gapped higher and try to push it higher. Now, I made some mistakes today. And I have these notes, and I was not patient enough, so I sold the straddle. Um, I sold the straddle, and it went up higher than it should. Actually, I sold one side of the straddle and waited for the other side. So I sold the call waiting for a correction, but it pushed higher. So that was the funny thing. So let's go over what exactly happened. On I guess the 5 minute without the extended hours. So today only. So it uh, gapped higher right here, and then it pulled back, and then it went up. So somewhere here, I tried to time the top. Okay, so I sold the call option, hoping to get a pullback, and then sell the put option. So I was gonna do a straddle, but I was gonna take one side first and then the other side after I had some gains on the first side. Now it went all the way up here, so I was sitting at a loss again. So I need to be more patient and wait for it, because at the time you just think, they just seed you with this initial drop. So right away it gapped up, it dropped. So my timing for the top was, it didn't give enough room. So this right here, already my call option that I sold was down 650 or something like that. So the whole time it was just sitting there, never going even, never going even. Eventually it went even, then it played around. It took so long that when I was only up like 50 or 75, I took the other side of the put option. Meaning I took the other side of the straddle. I sold the put. Well, guess what? Boom, it dropped. And as this was dropping, the Amazon VIX was also increasing. Okay, so at one point I was down on both the straddle, even though I was at the time that I took the second leg. I was up 100 when I took the second leg because of the intrinsic value increase with the VIX. I think when it's jumped up here or whatever, I end up being down 100 or 200. So I didn't like that feeling, and I was worried. I was just worried overall that it was just gonna go one way or the other. Now, it turned out it didn't go, right? It did not go, and it actually took a long time before it went. So it sat here wiggling around. Had I waited, so that's why my note says the morning are the traps, morning traps, and then the afternoon is trash. Sometimes the trash is a hijack, and they hijacked it again in the afternoon, obviously. But had I held on to that straddle for a little bit longer, look at it, it stayed pretty much at the 3,500 for a long time, right? Even here, I could have covered. So I could have waited a while before I cover. I didn't. I covered way too soon because I was just scared. I was just overall just scared at one point. And I took, I think, maybe $150 gain on that straddle, which is okay. It's just I didn't like the fact that it was down 650, you know, by not being patient enough, and I didn't like the fact that my straddle was down 200 at one point. So I took the 200 gains on the straddle, Even though had I held it, it probably would have been about 400, maybe 500, if if I waited all the way toward close to the afternoon. So then in the afternoon, obviously, it looked like it was dead in the water. So this is technical Thursday. Technically, it's technical Thursday. All the signals are technical. But then it became trash, right? So somewhere here was trash, and if you try to play one way or the other and you got the wrong end of it, boom, you got hit. First leg down, always the first leg down. Then you think of a recovery, didn't recover, boom, another flush. So what is going on? Well, again, key technical lines are 15 minutes, right? So let's go back to the 15 minutes and take a look at that. So 15 minutes is a key technical line. Right here's the trend line. Went to it. So now it either bounce or it falls. So I actually tried to buy a straddle. Oh, wow. Buying a straddle, right? Yeah, I tried to buy a straddle. Missed it by a little bit, and I think that would have been a good strategy had I actually bought it. I missed it by 1 point, I think, buying that straddle. And when you buy the straddle, essentially what you're doing is I was targeting the 340 call option and the 350 put option. So buying one of these means that if you land anywhere 3,500 tomorrow, you make a gain, or was or if you gain at 3,400, you're predicting a high move tomorrow, and that's what I'm predicting, a high move tomorrow. And that's why I was planning or had an order to buy the straddle, and this looks like a good straddle to buy. Now I missed it by a point, unfortunately, but I'm going to try again tomorrow. Tomorrow at the open, I'm going to try to put that same order, and maybe I get it, maybe I won't. Most likely I won't get it because they're going to gap it one way or the other, either up or down tomorrow. And then they're going to run it one way or the other. They either run it up or run it down. So one of these straddle right here, the 3450 puts, or the other one was the 3480 call option. One of these guys are gonna fly, so I probably won't be able to get that straddle, but I'll put an order anyway, right? So you can see right now, all these call players, the people who bought the call options, all of them are now flat. Oh my goodness, what's going on? Well, that's what they did. They did a successful, I guess, a successful manipulation or a successful attack on these options player and got them pretty much down to the flat line. Some of them even being negative. And the other thing I noticed today was the volume on this guy was pretty heavy, right? Here it is. So yesterday, this volume, like I said, yesterday, this volume right here was the attack. It wasn't good enough. To me, it wasn't good enough to say that it was going to be a continuation. But the morning, it was strong. It was strong. So I was like, this is not a good sign. This is not a good sign because these volumes were actually, coming in and coming in, even though it's down here, it's coming in. And, this head fake movement higher, I should have known based on this volume. Now, it's never guaranteed. It's just this volume is an indicator of what something might occur, right? You gotta pay attention. It's like it's giving you signals right here. Something may occur. And so even though it's up here, I knew it was gonna break out. I knew it wasn't gonna break out. So any put I bought, even though it went the opposite direction or whatever, and it pretty much all the options that I bought went the opposite direction at one point or another for whatever reason. That's why I keep thinking they do see your shares, because the moment I get in, the options always go the opposite direction. And then it'll take a 5 minutes, 10 minutes, maybe even 15 minutes to go back to flatline. And then that's when, right when I cover, because I don't like to see the loss and I'll take the small gains, boom, that's when they get, that's when my put actually jump in value or whatever it is. So, but anyhow, just looking at the signal, I knew there was no way they were gonna break out, even though the volume on the call options was high, right? So I was looking at this, it was high, but it wasn't high enough. In my opinion, it wasn't something like this on the 3500, on the 3450. I mean, there's really no volume on the 3450 compared to what it was here. You know, yeah, it's all the way up here, but still, there was hardly any volume. The 3470, and not hardly any volume. So the main one was 3500, and this volume was not good enough for me to be afraid of a breakout. I just didn't think a breakout was gonna happen, right? There was no way it was gonna happen. Even here, I should have held onto a put option, to be honest, thinking it was gonna crash. I just don't know why I just don't do it, because, well, I know why I don't do it. It's a risk management account. So, at the time right here, afternoon crash, they could easily just hold it flatline, and then your put option would just drop tremendously in value, especially when Thursday come around. Thursday afternoon, if this stay flat, your put option is gonna drop 25% just staying flat. Because Thursday to Friday transition is that's a key time frame. So knowing that that's a key time frame, the intrinsic value on the put options are going to drop a lot in the afternoon. So I didn't want to hold it and see a loss for the day, But if I did held it, yeah, look at that gain. Boom, right there. So they do it that way on purpose. Afternoon, they hijack it, like always. Boom, that's a hijack. So now you're sitting at a key technical level, 15-minute. You can say, well, it's a first test of the 15-minute is gonna go back up. Yeah, it could. First test of the 15-minute could go back up, but then it could also hold flat or head fake and then go down to what, 1425, maybe even 3400. 3400 looks very inviting. Why would 3400 be very inviting? Right there, 61.8 on the Fibonacci, 3400, 61.8 on the Fibonacci, and also 50-day moving average, the blue line, the 50-day moving average. So that's inviting as well. But it also can recover and go back up to 3500. I don't know what direction it's going to go, to be honest. And I'm not here to try to say I know what direction it's going to go technically. I just don't know. Here's the 60-minute trend line, which is also important. And the McCullough oscillator on the 60 is going down and down. So that would be a bias on the negative side. So I do have that written down on my notes for today. The bias is down. Based on the fact that I guess the McCullough oscillator on the 60 is going down. And let's see what the McCullough oscillator there it is. So McCullough oscillator for the daily is also red, the first red. So yeah, bias is actually going down. So I would say I would not be buying the straddle tomorrow. Do not buy on not buy. Do not sell the straddle. Do not sell the straddle tomorrow, because there's a good chance of a one-way direction, meaning it can just boom keep going down. All these guys can keep going down because it's at the 15, so breaking of the 15. Now I don't guarantee that it's gonna go down. I'm just say the risk is there, so I am trapping this Shopify actually. This Shopify, I did a one-legged, because of this head fake. This head fake right here, essentially, because it was at I guess a breakout point. So at some point here on this flush down, I sold a call option. No, I sold a put option. hoping for a bounce. Well, it just kept going down, and then play around with the 15-minute. Here I was almost flatline, but it didn't go back enough. It almost flatline. I think I got it right here. So, boom, fail again. Boom. So now I'm sitting at a loss on Shopify. And it's a risky because what they do is level to level. So let's take a look at that on, I guess, closer, right? Level to level. So what is level to level? Level to level means it went to one level, a key level, I guess, right here, trying to break out. It failed that level, and now it's gonna reverse completely to another level. So level, and where's it gonna go? Another level down here. So it's a straight line all the way from level to level. This is the worst type of manipulation. Level to level is the worst type of manipulation because everyone who bought here, everyone who tried to time the bottom, they are feeling that pain, including myself. Yeah, so I'm think I'm trapped in this Shopify, and I really don't know what to do because the minute you try to buy a call option, I mean a put option, it's probably gonna go the opposite direction, but it's never gonna be good enough to get to where you can cover. So that you're just gonna be trapped one way or the other if you try to play, manage it one way or another. So um, yeah, I can hopefully. I mean, I got a feeling it's gonna gap down tomorrow and trap me even more. So yeah, that would probably be what happened. Is at this point, they know there's a lot of buyers here, right? And the front runners, the manipulators, all the whatever market maker, they're gonna try to get all these buyers to feel the pangs, including those who bought right at the end. So most likely it's gonna gap down tomorrow and try to flush it. Yeah, to probably try to break this 20-day moving average, and if it breaks it, boom, I'm in more pain. He's gonna be at the 1500, and that's gonna be bad. So I need to find a way to. I don't know what to do, to be honest. I might just take the loss, or hope for the best, or just wait it out. I mean, that's why when I sell one of these options, I actually sell them 2 weeks, 3 weeks out, right? So I sold it for yeah, so the monthly option expiration. So I got 2 weeks to hold on to this guy. Now, if it's 2 weeks of continuous sell off, then yeah, everything I made on, I'm gonna take a huge loss because selling that put, I guess, selling that put, those value of that put would continue to grow and grow and grow if it's a straight line. Hopefully, it's not a straight line. You look at this, and Shopify tend to be, pretty stable as far as within a channel. Even here, it's pretty stable within a channel. I mean, yeah, you get these straight line up. I guess if you get a straight line up, potentially you can get a straight line down as well. So this is my worst fear right here, is this type of straight line down, or bad news and you got a huge gap down, right? Bad news, a huge gap down, and I'm SOL. So yeah, I gotta find a way to massage my way out of the Shopify, and maybe I get lucky with a gap up tomorrow. If I get a gap up tomorrow, I'm probably just gonna take that loss, whatever that loss may be. Just take it, and because I feel like any gap up tomorrow is just gonna be sold. For Amazon, for the QQQ, for Google, for Apple, for Tesla. Maybe not Tesla. Tesla doesn't really behave technically. It just does what it does, to be honest. So let's take a look at Tesla. I haven't looked at Tesla in like forever, to be honest. So I'd like to see what the heck is going on with this guy. On the 60, yeah, it looks strong, right? So on the 15, it's at the 15. So is that an indicator of a break of the 15 and a reversal? Can be. It hadn't hit the 15 in a long time. So that's a good, I guess each one of this is a day. So that's a good, what, 1, 2, 3, 4, a good 5 days of being above the 15 before now is testing. So sometimes the first test of the 15 it does go back up. So I would think that's the case for Tesla because it doesn't really behave technically. So right here you can see it's a beast on itself, or it can be a dog depending on how they. That's why I don't like playing Tesla. It's just its behavior is on completely on its own. And if you can play Tesla, good for you, because I can't play it and I wouldn't know how to play it. Even though it looks like an easy chart to read, you got all these technical lines and whatnot. I'm telling you, it is not easy for me, at least. You say, well, oh, look at this. Oh, this doji top. 3 consecutive doji top. It's gotta go down. Yeah, until it head fakes and then breaks out and go to 775. Yeah, that's what Tesla does. It does what it does. There's no indicator. No, it could very well be 3 doji top. Boom, break to this, squeeze right through it and go to the 50. Who knows? Um, but at this time, I really still think that overall, even if tomorrow is a down day on the QQQ, I still think there's gonna be a capitulation top. At this point, the volume is still too weak. The VIX is still way too weak. I mean, it's just trying to play its way up, trying to scare people out. Scaring people out is just inviting new shorts to go in, or people with weak hands to sell out, and eventually it's just gonna pop. And all those people who sold out say, "Oh, I missed the boat. I'm gonna get right back in and try to catch this run up that goes to a capitulation top." And of course they're gonna get hit hard on the correction, because they sold out on the bottom and then bought out on the top, and then it's just gonna crash, or we're just gonna have a sharp decrease. So hopefully that times up with the meme stocks for next week, right? AMC, this guy, and Game, this guy. Hopefully, sometime next week, you get that squeeze on the AMC and Game, and it's gonna correlate with the run up on the general market. I'm talking about the QQQ. SPY actually continues to go higher, so looking at the SPY, yeah, the SPY continues to go higher. There is no correction on the SPY, so if the SPY continues to go higher, and as long as the QQQ, it's gonna line up with the Game and AMC, trying to get that short squeeze, and eventually, boom, everything will break. Um, once you hit that capitulation top. So that is my analysis for today, Thursday.